Our guest today on Talking Trading is Roman Bogomazov from San Francisco, who's a manager of a hedge fund and also the principal and instructor of Wyckoff Analytics. As a trader and a chartist, I have heard about Wyckoff Analytics for a long time, and so it's a thrill to get Roman finally on Talking Trading. Roman, hello and welcome.
Well, hello, and thank you so much. These are such kind words. It's great to hear that we are known, even though we are such a small company, but I'm very happy to be here.
Thank you. Roman, let's find out a little bit about you. You're Russian, you live in San Francisco. How long have you been trading?
Well, I've been trading for the last 25 years. I've migrated from Russia in 1995. I've attended some technical analysis classes at Golden Gate University in the late 90s with the Hank Pruden, Bruce Frazier, those are big Wyckoff names, and got interested in technical analysis in general and got very interested with Wyckoff methodology. And then in the last 10 years, I've been a teacher myself, and obviously trading my personal accounts, trading my institutional accounts, and teaching whoever wants, to learn about Wyckoff Method and trading in general.
So we want to learn about Wyckoff Method. Roman, why is Wyckoff Method so famous?
Well, I probably even didn't know that it was so famous until you said so. But
It's a narrow world, share trading. It's a narrow world.
yes, but in the trading circles, obviously, people know what Wyckoff Method is and what it's all about. I think it was popularized a lot by Wyckoff himself in the last century. So he was a very, very successful trader. He was an extremely successful educator. If I would be comparing him to any modern figure, it's probably would be William O'Neill. That type of figure. He had 100 years ago, he had like 200,000 subscribers to his newsletter. That's how popular he was at that time. But also there is an underlying fundamental knowledge in the Wyckoff method that is so true to trading in general and to the chart reading in particular. And that is all about institutional presence, institutional interest in a specific asset class or in a specific stock, and how they go about this. How are they going about they accumulating their positions? How are they going about the distribution of their position? And that is what we are studying. We are studying the reasons of why and how we could possibly see that on the chart. That's what's so important to us. And our whole trading idea and the belief is that institutions or smart money or big money are going to be predominantly correct in the price cycle. And we just want to follow them. We want to recognize their footprints, and then we want to follow them.
I see. So let's talk about the fundamental things that traders need to acquire in order to be successful. And perhaps we can talk on the institutional movements within this. Let's talk about number one, knowledge.
Well, there are four big steps that when students come to me and they ask, well, how should I approach education and trading? So I always introduce them to four things. First, you have to have some kind of knowledge, either a knowledge about the market, and usually those are beliefs about the market and trading. For instance, one of the beliefs could be that market is uncertain. And somebody who's going to come to me and say, like, I could predict what the market is going to do, I'm usually very, very skeptical about that. And I literally almost instantly know the level of that particular trader.
Likewise.
You
Yep.
also you also need to understand how you're going to do this, right? So you need some kind of methodology. And methodology is a set of beliefs, principles, concepts that are based on behavior of market participants in the price cycle. So there are quite a lot of methodologies, but the methodologies that are correct, the methodologies that are useful and effective are usually going to describe the same things. They're going to describe how the trend is changing and where you could take your positions in order for you to benefit from a trending or non-trending environment. And it's very important to acquire that knowledge, and it doesn't necessarily have to be from one place or from one methodology. I done it myself, and there are quite a few successful students that we have, traders that I've met, that have looked into different methods before they kind of individualize their own approach to trading. But most definitely, this is the first step. You need some kind of knowledge about the market, about the method that you're going to use, and then you can proceed to the second step.
How do you pick a trend?
How do I pick a trend? Well, we look for, on the chart, we look for the change of conditions. Those are the first requirements for us. We want to see, and let's say in the downtrend, some stopping action. We want to see in the consolidation, exhaustion of sellers. And those preconditions, they're going to create the environment where a change of behavior is going to happen. So demand or institutional interest is going to increase, and that's going to produce increase in effort behind their buying and also increase of the result. So we're going to start seeing the bars that are bullish bars that are going to start advancing in the trading range, and they're going to identify for us the emergence of the new trend.
Lovely. All right, let's talk about the second one, skill.
Highly underrated, something that I am working with my students each day on. And that is basically, once you have the knowledge, you understand how you should go about the selection process, how you should go about identification of the best candidates, how you should go about development of the scenarios of confirmation and failure, how you should go about the understanding where you're entering the position, where is your risk, what's your stop loss, and how to go about movement of the stop loss to protect your profits. So with that, you need to practice and you need to develop your skills. You need to figure out how you see those, let's say, Wyckoff method concepts or any type of methodology concepts on the chart. Can you identify those? And what I'm finding with a lot of our students is that in general, our observational skills are very poor. An example of that would be just try getting out on the street and think about how many data points you are surrounded with. Could you describe to me the tree that is growing by your home, by your house? Could you describe everything that is on your car or in your car? And you will fail, I'm sure, because there are so many data points. So the chart presents to us the same dilemma. We have so many data points, even on a single bar. So we teach students and we're developing their skills of visual recognition of patterns on the chart. So that's number one. The second one is the ability to make correct deductions based on your observational skills. So it's kind of like Sherlock Holmes, right? So you're like seeking the truth and you're trying to solve the puzzle. So as you make observations, what does it mean? Is it bullish? Is it bearish? Is it a change of behavior, or is it something that is not relevant, in this picture at all? So you need to build that skill as well.
So when you're building those observational skills, you look at both macro and small patterns?
Absolutely.
Yeah.
Yes, you go to different timeframes. So for instance, you start with the, let's say, weekly or monthly time frame where the trends are big, where you have the macro view, the bird view, and usually I refer to this like you see the whole tree, right? You see like big branches. Then you go to a smaller time frame, daily. This is going to be usually for investors, is the point of entry type of data, weekly or daily for investors. So those are, not the whole tree. Those are smaller branches. And then you go to the intraday level, and this is more for active investors or for more active traders. And you look at the leaves, and there, you're going to have a multiple trends, many changes of behavior, and so on and so forth. But having the capacity and the ability to mentally switch from one time frame to another and to see the whole picture from that perspective is extremely important skill for traders and investors.
All right. That's probably a little bit of process, but let's talk about process for trading.
That's step number 3 for me. So once you have the knowledge, once you um, have trained and yourself, your mind, to recognize the patterns
Mm.
that you need to see, and you understand the mechanics of how you're going to open the position, how you're going to follow the position. The next step is to establish the process, which is basically your routine. You need to automate your routine or mechanize your routine to the point where it becomes an unconscious event for you. So let me give you an example of what I do or what our students do. For instance, my preparation for the week starts on Friday. This is where I'm going through all of my positions. Um, I'm looking for the signs of, let's say, some kind of change, maybe even deterioration. I journal about my positions. And then I look at what needs to be closed, let's say if this is investment, or what needs to be traded. Then I journal just about myself. How do I feel about my trading right now? How do I feel about the market? How do I feel about the process? What's happening there? I calculate and quantify the variance um, between my execution and what my trading plan requires. And then I go into the process of identifying what kind of mistakes have I made in the last week. And I look for the commonality of the mistakes, and I put them in some kind of feedback loop uh, process where for the next week, I will know that I don't want to make this mistake because I've done it before. So I'm trying to capture myself, correcting myself in the moment when I'm possibly making the mistake. And then also the selection process itself. It's kind of simple, but for the beginner, it might be a little bit daunting. So I would go usually through about 400 to 500 stocks, create a watch list for the next week, and then identify on that watch list the levels that I would be looking for the points of entry, for the stop loss, for exits. And then during the week, that watch list of stocks that I'm following is going to be my um, daily routine. I'm going to look at that list and I'm going to identify that something is working now. So I'm opening the position there, or I'm moving the stop losses, or I'm taking the profit, or I'm exiting.
How do you not be your own worst enemy when you're doing this? How do you not start missing trades, being chicken to take trades? Get
Well, you
disheartened.
do.
You
You
do?
do.
You
Of
do?
course. I make a lot of mistakes. And if somebody will tell me that they are perfect, right away, I'm not even going to talk to that person. Because that's not the case. I've met a lot of traders. I've met a lot of modern traders that are kind of like, really high profile traders. And all of them make mistakes.
Mm,
All of them. There is
mm,
no exceptions. There are no exceptions whatsoever. And that's only because market is unpredictable. You can't predict the market. The best thing that you can do with the markets is to learn how the market works and follow that. If you could identify when the change happens in the market, and you could say that this is a high probability spot where the trend is establishing itself or is already established, and I'm going to follow that trend until it's broken,
mm,
until it deteriorates. That's probably the best bet that you could make, trading the markets.
mm.
Everything else is really just either gambling or like a lottery or something like this.
Yes. All right. Let's go to mindset trading. And we've already started to talk about this.
Yes. So step number 4 in your trading education would be mindset. And this step is kind of tricky because a lot of the beginners or intermediate students, traders come to me and they say like, I see a lot of mental mistakes that I make. And I say to them like, so what? Concentrate on your skills first. You need to get
Mm,
your skills to the level of such mechanization where it becomes an unconscious event for you during the trading day. If it's not going to be unconscious, you're going to be distracted. And the mistakes that you think that are mental mistakes could be those mechanical mistakes of trading. So don't go into the psychology of trading until you actually acquire knowledge, until you actually build properly the skills, and until you have the process. Once everything is mechanical in those three departments, and you still have some problems, this means that now you can look at your mental landscape and you can start figuring out through journaling, through talking to maybe your peers and showing them your trades and inquiring, what am I making, how am I making this mistake, and so on and so forth. Going to maybe some professionals like psychologists where you deliberately expose yourself and become so vulnerable, and show your mental mistakes so that someone from outside, because you have no idea who you are, if you're making that particular mistake, something is a blind spot. You need somebody like a third party that could point out
Mm.
exactly what's going on with you. And there are quite a lot of tools right there that you could use to develop your awareness, and the awareness is the key word. So even through the whole process of knowledge, skill, process, we're trying to build with our students that a sense of awareness, a sense of not just what you don't know, but also a sense of what you don't know about yourself.
I haven't heard that so well expressed that your skills have to become completely automated and subconscious until you start working on your psychology. That was so good. Can I ask you how complicated your trading plan is?
One page.
Mhm.
And I've conducted many private sessions with many students, many traders, and I've looked at trading plans of kind of like those high profile traders as well, just because I know them, and we communicate, and a lot of the colleagues, good traders, when they come for help, or I go in, I ask them for help, like look at that. So what I've seen a lot with students is somebody would bring me like a 30 or 60-page trading plan. That's not executable. You will not be able to remember everything
Mm.
about that trading plan. So usually I say condense it to 1 to 2 pages and have one-liners. I have to recognize this condition. Under this condition, I behave this way. And then behind each line, you might have a set of skills. You might have to develop a set of skills to recognize that condition. And
So
you might,
what, Roman?
for instance, if we are talking about a change of trend, how do we recognize that? There could be a whole set of skills that you have to have. So, for instance, stopping of the downtrend, deterioration of selling, emergence of buying. And you need to understand how to see those on the chart. So, how do we look at the price, look at the volume, compare an analog different type of moves, let's say in the trading range or in the downtrend, and what do they tell you? So we have to go through that process, of recognition.
This is something that catches me out a little bit. I trade weekly equities, but I also trade daily charts. And my basket can be too big, and I can get a bit overwhelmed. How
Yes.
much should a trader trade? How big should their basket be?
Well, it depends on the time frame, obviously, on the intentionality behind your trades. I would say, from what I'm hearing from you, you are more of the investor, where you're looking at the weekly charts. So therefore, your time horizon for holding a winning trade is going to be, expanding in comparison to, let's say, a trader who is an intraday trader. So with that, I would suggest that probably not to exceed 20 positions, as an investor. If you're a swing trader, I would advise just to have less than 10 positions. If you're a hedge
Mm.
fund manager, so for instance, in my institutional account, we have more than 30, 40 positions. In my personal swing trading account, I tend to go lower than 10 positions. And in my IRA investment account, I don't have currently more than 10 positions, but I would say that you could have quite a number of positions there. And it also in the capacity of following up for those with those positions. On the weekly basis, you have to go to all 20 and you have to assess, right? Are they
Right.
in the correct spot? Are they doing, well relative to, let's say, emerging, selling or buying? So it also depends on the trader investor.
Roman, I love talking to you. I'm not going to let you go. I'm going to throw you some more questions. Let's just talk about some general things that have been happening in the market. Bitcoin.
Of course. What else could we talk about? It's all about Bitcoin. It's my nemesis. It's the beast. It's the Moby Dick. It's something that I haven't been following um, for a while, and then our community just requested, that we would expose ourselves more into the crypto world itself. So
Oh,
we have our crypto expert, Alessio, who is combining it or taking rather the Wyckoff concept and applying them into the crypto world. And it's just so fascinating. That's number one. But me personally, lately, in the last 2 months, I've been obsessing with Bitcoin. I cannot deny this. I go on Twitter and, I put a lot of analysis right there. And it has been my Moby Dick for sure. Um, it has such a character of the movement, and it's always explosive, it's always volatile, it's always overextending or suddenly goes into the periods of inactivity. So it's a very fascinating asset to trade.
gold.
Gold has been very steady in terms of the kind of like trying to understand what the trend is. I've been in gold trade since 2019, so it's just kind of
Mm.
like in my IRA account. I bought it in 2019, and I forgot about this because my targets are all about 2000, way above 2000. And currently, just recently, especially in the last couple of weeks, we have had a very unusual price action right there, an aberration, something that destroys the structure, and it requires time to assess what kind of next potential move we could have. So it was an enigma a little bit in the last couple of weeks, but currently I see that it's stabilizing and just consolidating.
Look, I'd like to ask you about the American market, so many markets, but I kind of feel like that's another interview. What we're talking about with mindset and skill and process, that is its own gold. So,
That's true.
can I just go back to final pieces of advice that you'd give to traders and their methodology and the importance of their skill set?
Think about the profession that you're in. If you have 9 to 5 job, what do you do? Let's say you are a doctor. We have a lot of doctors as students.
Mm.
You're an engineer. We have a lot of engineers, or any other profession. And if you consider yourself a professional at the very high level, how did you get there? What did you do to become that type of the professional? You probably spend a lot of time just studying. That's number one. You have to know what to do. Secondly, you probably spend a ton of time practicing your skill, and then going through many, many experiences to
Mm.
become better.
Mm.
This is what I do not see in a lot of people that, on social media screaming that they are the best. So practice, get the knowledge, and then practice it. Practice every day. Practice it through some kind of repetition, through some kind of process that will establish a much more unconscious way of how you analyze the market and how you trade the market. And only then the emotionality of your own mental landscape will make sense in trading, and it will not be in the way of the mechanics of trading. So just do that.
I think that is one of the best answers we've had on Talking Trading after 8
I'm
years.
glad.
Mm.
Thank you.
Mm. If listeners want to find out more about you, Roman, where do they go?
Oh, you could find us on our website, wyckoffanalytics.com. go to Twitter. Our handle is at Wyckoff Analysis. Go to YouTube. We have a bunch of videos there that are completely free, extremely useful. Students always, praise those videos. And start studying. Reach out to us, and we'll be happy, to help you and to put you on the specific path of education and skill building.
Is profitable trading possible?
It is possible, but it is very, very difficult to achieve that. So no, don't make mistake about that for sure. If you want to be a profitable trader, you will spend years developing the skills. That's number one. And even that does not guarantee that you're going to be profitable and consistent. Because profitability has its own levels. You could make $1 and be profitable. You could make $1 million and you're profitable as well. But you also have to be a consistent, and you have to understand where your consistency is going to break because of the market conditions, market environment, and you should be okay mentally and emotionally okay with that.
And if someone's got a trading plan that's not on one page, what do they do?
Well, you make it one page.
Simplify.
Simplify, exactly.
Roman, I really do want to keep asking you questions, but I won't. I'll let you go. Thank you so much for coming on to Talking Trading. Please come on again. It was a delight to talk with you.
It was my pleasure. And thank you so much for having me for this interview. It was a blast. Thank you.